All right, mic is on. Okay, we're good. Hey guys, hola, ¿qué pasa? What's going on? This is Hala Pablo. Thank you for tuning back in. Today, real quick, we're going to look at Avalanche. Yesterday, we looked at Algorand. Today, we're going to look at Avalanche. These are all my personal favorite coins. These are coins that I DCA in. The DCA points and the buy points and the sell points I share with my group. I don't share them with y'all on YouTube, but I just want to kind of wet your whistle and show you what I'm looking at. And if you get anything out of this, yeah, thumbs up for sure. Subscription helps out, helps other traders find these videos, others that might be interested in these types of coins. And with this technical analysis that involves Elliot Wave, Wyckoff, VSA, volume spread analysis. So without further ado, let me just very briefly show you what I see with this. Not unlike Algorand, okay, this is, I see a bearish macro structure unfolding for this coin. This is definitely a coin that you want to look at. This is what I'm doing. It's not financial advice, but let me just show you what I see, and I don't want this video to go on very long. I just want to get to the nitty gritty and show you and then log out. Okay, so here we have this. I want you to look at this Elliott wave here in the white, the 1, 2, 3, 4, 5. Okay, so this impulse wave, we have the 1 and the 2. The 3, of course, being the longest impulse, and then the 4 is the corrective, and 5 is the top. Okay, so this coincides almost perfectly with the Wyckoff distribution schematic. Okay, so we have the 1 and the 2, so this would be called like the primary support here. That would be the PS level. And then at the top of the 3, typically we have the buying climax right here. Okay, and then, of course, for the corrective wave, it comes back down to the automatic rally. Now, this is assuming that this is a distribution, and then it comes back up for the secondary test where it just slightly breaks trading range resistance right here. Okay, so this is all fine and good. And so what we have is our trading range established. We have the trading range resistance and trading range support. The resistance is drawn from the buying climax. It's a horizontal ray. And then on the bottom, we have the automatic rally where the support is drawn. Okay, and then now this is what clues me in that this is potentially a distributive range and that we can expect a bleed out. We can expect much lower prices for Avalanche in the near future. Is if you look after the automatic rally, the secondary test came back down to mitigate the automatic rally here. But what we see is after this, we see a failure to break the 0.5 Fibonacci. Now, the 0.5 Fibonacci is trading range midpoint. And usually in these distribution ranges, if the market maker sentiment is to distribute, they will very rarely pump the price. The price will not find any value above the 0.5 Fibonacci. It's kind of like what we're seeing here. Instead, we have a series of higher lows and a series of lower highs as the price action consolidates and narrows to the confluence of this bear symmetrical triangle, which it did. And we saw that we broke back down here. It distributed back down to the trading range support. And then we had buy volume. Here's your demand right here. Your demand spikes as we hit the support line here. We had a larger than average volume demand in the buy power, but even then that failed to rally above the 0.5 here. You see, the price came back down. Despite all these buy orders, the price still couldn't break the 0.5 fib or the trading range midpoint, and it came back down and actually went beneath trading range support and it bottomed out here. And we see that again, it was a triple mitigation from the automatic rally. So that said, now this doesn't mean that this is going to wholesale markdown from this point, because that would be too easy, right? And market makers know that there are analysts like myself and others who look at these patterns and anticipate certain things. So what they'll do is they'll generate fake outs. They do this a lot. And fake outs could be like, well, you think it's going to distribute from here, but instead suddenly demand is generated, and we see the price action surge, and it even goes, it penetrates the zero point 0.5 Fibonacci, retests it, comes up, and it'll even go all the way up to trading range resistance sometimes, and you'll see substantial demand begin to register here in the vertical bar volume. So you're thinking, oh my gosh, it's going to moon, and then what happens is it'll go up a little higher, and then you'll suddenly notice once you buy, aka FOMO, in, that the market makers are start selling into the pump. We see these gigantic upper shadows start to register on the red candles, and then the price just plummets down, and then this is called a UTAD, an up thrust after distribution, and we see that a lot in these distributive ranges. See, there was one here where it just distributed back down to here, and so I call these patterns horns of the devil. We have the first horn here at the secondary test, and then the second horn would be the UTAD, and that's where the price just goes down to hell, so to speak. So we would see the same thing here. We would see the PS in this little wave, because everything is fractal format. So that would be the PS, and this would be the buying climax for this wave, this little Wyckoff cycle here, and then the secondary test would be the 5 on this smaller wave, and then we had the markdown. Same thing here. So this would be a micro. This would be a microwave, but this is all part of the macro here. So we could expect a UTAD, or we may even just distribute from here. That's the thing. It always keeps you on your seat. You don't know what's going to happen with it. You just have to keep watching the volume and price action metrics. So I wanted to share that with you. If you're interested in Avax, don't buy it here. I wouldn't buy it unless you wanted the momentum trade, the UTAD, if that's what it goes into. But instead, I would wait and see what it does here, get some more consolidation, and then it comes back down. We could see that, and that would constitute the, here we have the ABC, by the way, the corrective. So here's the A, the B, and the C. Mitigated this top here, and then now we're going to start a new Elliot wave. And if the Elliot wave is down, which it's kind of inconclusive yet, because we've got diminishing supply and demand as it consolidates laterally. So this could be more absorption, and it could be in preparation of putting another leg up, eyeing that UTAD that we already talked about. So remains to be seen, but let's just keep an eye on it. And yeah, guys, that's about all I have. Yeah, Avalanche, definitely a heavy hitter, one that you want to keep an eye on. And guys, it's a steal like everything right now. But if you can get it even cheaper, if you can have patience and wait for these things to dump and mark down at least, and get them at even better prices, then that's what it's all about. As we wait for this bear market to just play out over time. So, all right, let me let you go. That's all I got. Yeah, thank you again. If you got anything out of this, if you like this kind of analysis, no nonsense analysis, thumbs up. Yeah, guys, I'd appreciate it. And leave a comment, and I'll be sure to get back with you. And if you have something you'd like me to look at, go ahead and also leave a comment. And if I can, I'll try to get to it and share it with everyone else. All right, guys, take care, and have a happy Thanksgiving. All right.